This content reflects my own personal opinions and is not financial advice. With that said, let's kick off today's episode. Look at this. Tether just dropped $1 billion into a robotics firm. Centrifuge just launched a tokenization service with real issuers, and Africa's unlocking $70 billion in trade using stablecoins. Now, this is live infrastructure. Now, let's break down the three biggest moves happening right now. The first one that you can see here is around Tether's $1 billion investment into robotics. It's a signal that stablecoin issuers are becoming industrial capital allocators. But what makes this move even bigger is the AI angle. Neuro builds cognitive robotics powered by artificial intelligence, machine vision, and sensor fusion. This is the first time we're seeing a stablecoin treasury directly fund AI-driven real-world infrastructure with RWA and AI exposure baked into their balance sheets. Now, I have in a couple of videos explained not the dichotomy between Bitcoin and real-world assets, but in addition to that is AI, because we're living in a digital intelligence economy. That is the trichotomy. Bitcoin as digital capital, RWA as the utility layer, and AI as the intelligence layer, because we're going to be seeing AI transacting on the blockchain directly on our behalf because it makes total sense. They will learn about our buying patterns. They will learn about our strategic goals, whether it's from an investment perspective or through learning and development, doesn't matter the use case. And it's very interesting to see that Tether, being the largest private issuing firm for stablecoins, to have made this significant investment. It's not a small amount, mind you. We're talking about $1 billion investment of seed capital into this German robotics AI firm. So I'll be very interested to see how this will actually pan out. But this is going to really set the precedent now to actually implement this trichotomy vision that I've always anticipated. So interesting times ahead. Another interesting and pivotal article is this one here around Centrifuge and Daylight. Now, Centrifuge is launching a tokenization service with Daylight. Is a major leap for credit RWAs. It's a modular issuance stack for real-world credit built for institutions. It shows how private credit is evolving from fragmented pools into structured, tokenized instruments with issuer-grade compliance. So again, this is something that I've had begun talking about, where it all started out with tokenized treasury, so getting those government bonds onto the blockchain so that governments can actually continue to issue debt or requirements for capital, but on the blockchain arena, because it provides that 24/7 market coverage rather than buying them on the typical financial markets, which is very restrictive. But in addition to tokenized treasuries, we are seeing a new wave of capital, which is tokenizing private credit, which is different from tokenized treasuries in that private credit is mostly aimed at those institutions who would need leveraging, i.e. borrowing, rather than resorting to their own cash in their corporate treasury reserves. So we're going to be seeing this tokenized credit layer being built out to cover the actual financial needs of these corporations to tap into market accessible, near real-time pool of capital. And that is what tokenized private credit is all about. Now, I'm just going to augment this article with an interesting chart that I've been following, and it's called RWA.xyz, because this contains live on-chain data on anything to do with RWAs and the coin project. So you can see, if I just click on private credit, which is a sub-industry strand of RWAs, you can see the active loans value is almost $19 billion. This used to be half its value at the start of this year. At the moment, it's 2x'd that amount, which is phenomenal. And this statistic is rather surprising. The current average APR, so the actual interest that the borrowers are being charged whenever they take out these private credit loans, they are being charged 10%. But of course, you need to deduct from that kind of a markup interest rate to cover the issuing firm's expenses, overheads, and all the rest of it. So if you, let's say, deduct, for the sake of argument, we'll take off 3% to cover the actual overhead expenditure for these private credit issuing firms. From the 10%, we're talking about a net yield of 6%. Now, you name me which bank account currently offers a net APR interest rate of 6%. I don't think there is anything like this anywhere on earth. So this is the reason why we're seeing a plethora of private credit firms coming out and starting to tokenize these private credit loans on the blockchain. Because at the end of the day, we don't have to worry about branches, the excessive headcount, because that's the beauty of the blockchain. It removes all of that. You just need to worry about a handful of individuals rather than thousands upon thousands of FTE headcount that these private credit loan issuing firms to worry about from a bottom line perspective. So this is clearly, it makes total sense that there is a huge opportunity around tokenizing private credit. And if I just flip underneath, you can see that Centrifuge is 7th place with almost $650 million worth of total loans out of the total 19 billion. The top one on the list by far is Figure, almost $17.4 billion of active loans. For the reason I've just explained in the above, the private credit loan is going to really be a humongous segment in the RWAs, potentially dwarfing, in fact, the tokenized treasuries. So those government bonds on the blockchains. But I mean, it's very interesting to see that we're talking about a rather interesting set of net APR interest rate payments for the actual investors in these private credit loan space. So this is going to be explosive. Now, if I move on to the last article, IOTA's push to unlock a whopping $70 billion in African trade using stablecoins is one of the most ambitious RWA deployments we've seen. It's about building a pan-continental trade stack with programmable money, with partners like the African Continental Free Trade Area and the World Economic Forum. These are the participants that are involved in this initiative. Now, this is a serious attempt to digitize cross-border commerce using stablecoins as the backbone. Now, I've explained that stablecoins, amongst many of its attributes and benefits, that the key one is the egalitarian aspect. So what do I mean by that is to provide access to a pool of capital to every individual on earth, irrespective of their background, if they've been debanked or unbanked. It really doesn't matter, and it doesn't matter where you live. Because by doing this, you're going to be opening up the development of the individuals in certain pockets of the world. We're going to be completely eradicating poverty, which is one of the sustainability development goals, if you recall, from the United Nations, the famous 2030 agenda. That is what the top SDG goal. By supporting stablecoin issuance to the entire world population, you can easily eradicate a proportionate amount of poverty that there is out there in the world just by allowing individuals to access stablecoins to conduct their day-to-day. So this is a really positive impact that you can provide to the likes of Africa. And it's just Africa. We're talking about the rest of the continents out there. We are starting to see a lot of movement now for the whole world to abandon the CBDCs, the central banking digital currencies initiative. I see that eradicating itself to zero because nobody wants that. What they want instead is stable coins, right? So that's clearly the trend is moving in that direction. So just to sum up this week's developments, real world assets aren't coming. They're already here. From stablecoin backed industrial capital to tokenized credit issuance and pan-continental trade rails, the infrastructure phase is live. If you're serious about crypto adoption, this is where the real story begins. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology, and real world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family, and colleagues. This channel aims to deliver insight, no noise, and no hype. Subscribe now.